Well, yeah, we're going to continue to see the rise in your freehold property, your townhome, your semi, your detached house, and this is what has always been the thing. The supply of that product, it's it's not even fixed, it's decreasing. So why it's decreasing is you'll go to an area where they'll knock down a whole bunch of houses, and they'll increase the density by putting up a condo building. So you have a decreasing supply of that freehold product. So you have this really, again, low supply aspect. So you're going to continue to see prices increase with the low interest rate nature in Toronto for this freehold housing. It's just going to happen.
Hey everyone, welcome back to the Mark Loeffler Experience. We got another great show here for you today. We got Alex Wilson, the Condo King from Toronto, back on. We're going to be talking about condos. We're going to talk about freeholds. We're going to talk about areas that we think it's going to grow in the future. And guys, if you haven't, please smash that like button for the YouTube algorithm. It really does help the channel grow. And let's get into it. Welcome, Alex.
The Condo King of Toronto. And we're going to be basically following up from the last episode we did. I think it was in November, wasn't it?
Yeah, in and around there.
Right around there, where we talked about the condo market crashing in Toronto, the rentals going on there, and what that was looking like, and how that was all going. And we have Alex to come back on here today to say, well, what's it doing right now? Because he did make some predictions back then, so we're going to see if his predictions ring true, because he kind of predicted that where the bottom was going to be in the January timeframe. Welcome back.
Yeah, it's amazing how quickly things have been springing back in the market. So the actual bottom ended up being November into the first week into December, and then activity in our market started picking up and continued to pick up into January, and believe it or not, booming now.
Well, I know that January, the numbers of resales in Toronto was, I think it was like 9,000 or something. Like it was something ridiculous. Like it was 50% more than it ever had been before.
Yeah, and so what we're seeing multiple offers on condos again. I was involved in multiple offers this past weekend, just last weekend, on a new condo that came up for one of my investors clients that bought in the city. And even just this morning, I was looking on MLS, and a unit that I had liked for a while, which was still sitting on the market, they just increased their price. We are seeing from even just January to February, and specific examples of where units are selling for $100,000 more than they were in January to even February this year. So the bottom ended up being November, beginning of December, and then the investors started coming on and started buying up this product, and users coming in, buying up the product. And we also saw the amount of the active listing of the market get cut in half. So it is a supply driven thing as well, where we about half the number of listings that we did October, November last year, now flowing into February. So definitely the supply has cut. Now, in regards to the rental market, has that seen any improvement? No, it's still absolutely terrible. So there's no change in the rental market, but the resale market has definitely improved.
During that period, we all got locked back down, right? And you guys have been in gray there for a long freaking time. Like, I don't even know when you went into gray. For those of you watching in other provinces or other countries, that means that basically everything's shut down. Like, it's only in this, like, essential services like grocery stores, that type of thing, that are open. So there's no restaurants open except for takeout. There's no entertainment, there's no bars, which that's a huge portion of, I would assume, the renters downtown would be like people who work in those industries, right? Or people who work downtown and who are now still working from home, because I know that TD was kind of opening up their tower, but like, I mean, you know, usually you have 30 people in an elevator at a time, and that's just not happening right now. Like, you think you can have 2 or 3, right?
Yeah, and that's where, so we've seen resale prices rebound back up, because people are seeing the long-term value of the asset. They're not buying it looking to sell it tomorrow. So they see an opportunity to buy a relatively depressed asset, still compared to what pre-pandemic pricing was. So they're seeing an opportunity to get in at an ideal moment. But the actual, on the rental side, which is here and now, nothing has changed for them. So zero impact on the rental market. These people are buying, they will be cash flow negative unless they're putting more money down than your traditional 20%. And they will be getting, again, very poor rents compared to pre-pandemic levels, but they're banking on once things go back to normal, again, as you mentioned, office buildings opening back up, restaurants, live entertainment, things that make people want to live in a downtown core. Once those start opening back up, they're banking on things getting back to normal in the core. So it's really investors and users taking advantage of that. And on the end user side, there are a lot of people that are tired of living in their parents' basements. And yes, there is nothing going on in downtown Toronto, but there are people that, okay, it's been a year and I really just want my own space again. And seeing them taking advantage of buying opportunities downtown as well.
So what would you say the percentage is between owner occupied to investor? Or what would, just a guess, like I'm not going to hold you.
I'd say it's about, like, if I just look at my own sheet of people that are buying, I would say probably about 60% investor, 40% end user on the resale market. What you have is you've had your established investor looking at picking up deals that own product downtown and believe in. And then again, other individuals that have been priced out of the market, looking at now entering the market. And another area which isn't really talked about, but we're seeing more of that, is the people that left the city of Toronto and bought in other suburban areas. I shouldn't even say suburban areas. Let's say in your Cambridges or KWs or Londons, where they've left altogether, but they still like the atmosphere of Toronto, and they've cashed out on their big homes. And now what they do is they bought a more affordable property in another area, but they still want to maintain a presence. And they're looking at a Pierre de Terre in downtown Toronto, which when they go back, they can stay in. So we're starting to see that market evolve as well, where people are just picking up a small asset they can use when they visit Toronto.
Yeah, well, and I've heard some of my friends doing that too. They're just like, well, yeah, I'm going to pick up something down there. Like we think this, it's not going to get much cheaper. Obviously, interest rates are super low, and they're like, yeah, I can pick up a condo down there, and I have a place to stay when I go down there. I can go. I don't have to get a hotel, and if I rent it out sometimes, or if I don't, then I don't really care. So
yeah, and they look at it like, oh, maybe my kid will stay in there one day. They have, and again, yeah, it's like, I don't think it's going to go lower. That's what they're thinking in their head, and because it's so affordable, the money's so cheap, they could literally just get a home equity line of credit, not even get a mortgage on the property, and just buy it cash off their principal residence with the increased evaluation on that. So those are the different metrics that are at play. So we had about a good 6-week window from October into December where the bottom was, but then things rebounded quickly. Just like everything's come back faster than the expectations of so-called experts like myself, or some, like, just when you hear in the news, they think it's going to take this long, and then things come back just that much quicker. And I will say that a lot of that has to do with the liquidity that's been pumped into the markets by the federal government.
Wow. So it's just, this video is coming out on Wednesday. Monday, we did the market update video. And a lot of that was, like, market was up 17% year over year. Obviously, we had a real super strong January. And it's like, can we sustain that? And it's like, well, Toronto, which is usually one of the biggest drivers of that, was one of the biggest laggards. Like, so we would have had 20+% return year over year, but Toronto, because of obviously the condos dragging it down, was only up 11% year over year. And now you're starting to see that demand come back. And again, like, you're seeing $100,000 price difference month over month, right?
Crazy.
It's insane. So, I mean, can we see that on a national level again? Like, I mean, like, that's bubble territory to me. But
oh, for sure. And I'll say, and I know, I predominantly work in Toronto, and Mark, I know you work really across wherever there's investment opportunities, because that's what you specialize in. And talking about bubble category, this is what I see. So what happened in 2020? It's like a rock hitting the water. The rock hit the water, and waves went like this. The waves.
I would say a boulder hit the water.
A boulder hit the water. See these big waves, right? And the beneficiary were areas outside of the city of Toronto. and it was at our loss. So you did have an exodus from Toronto. That was the big wave. Now your regular markets outside of Toronto, their supply of property, that's fairly inelastic. You're only going to have so many sellers that are going to be hitting the market. So you have this inelastic supply, and then the shock to demand. So their inelastic supply didn't allow for the shock of individuals, like that big initial first wave.
Well, yeah. So in that video, like I just look at Bancroft because it's just north of where my cottage is, whatever. So last January they had 12 sales. This January it's up 66%, 65% because they had 20 sales.
Mm-hmm.
But the prices are up 30% because again, there are, I don't know, 5-6 buyers for every property that comes up there.
Mm-hmm.
And it's like that across the board. Like obviously bigger municipalities didn't see it. Like, so Durham, it was up 22% year over year, but I think that's going to have another bump because they were the biggest increasing municipality, right? Like that's Toronto.
Oh, the prices, like the price, like the in various realtor groups I'm in where people share, like, look at this sold price versus this sold price in the fall, like crazy jumps. So where I see bubble territory, not this year. I'm not worried about this year because you're still having those ripple effects, and things aren't properly going to open up in Toronto. But I would suspect in 2023, 2024, you may see some suppression of pricing in those areas and possibly a pullback because you'll no longer have the exodus from Toronto. So now you're relying on back to that regular interaction of people moving and people selling. And I don't think the local economies can sustain those pricing, that pricing that are not commuter distance to Toronto.
Well, it depends how big the vacuum is, right? Right now, it's on blow, not suck.
Mm-hmm.
So if it turns back into suck and Toronto sucks people back in, then that's obviously going to affect that. Yet if people just say, well, no, I have friends who are in East End Toronto and they're like, we want to move out and we'll buy, in the country a little bit, and we can buy that cash, sell our house, and we have no debt plus a couple $100,000. And I mean, they're never moving back, right? They would never, and it's why
I'll tell you, they won't be able to move back because they won't be able to afford to.
There's always that, right?
Yeah.
I mean, that's why I never sold my duplex in the Junction, right? Because I was like, I would, not that I could never afford it again. It's just like, I don't ever want to pay that price, right? Like, I mean, I got it for $285,000 like 15 years ago, right? So,
or just your land transfer tax on it to re-enter the market. You double land transfer tax. If you have a duplex in the Junction, to replace that, you're at least 1.5. And land transfer tax on that, you're over $60K cash out of pocket.
Yeah, which is, I find ridiculous. That's why I like buying outside of Toronto. Actually, obviously I'm looking outside of Ontario too, because I can go to Alberta and no land transfer tax.
No, yeah. If anyone watches my stuff, I'm a big fan of Alberta right now too. Hey, here we go. Let's make a bold prediction, Mark. Alberta, Calgary, next boom city. I've been saying that since 2019. You can look at any video on there. We focus on different asset classes. I'm condos. You're multifamily. Just because I like really easy stuff. But I'd say that's going to be the next boom city, bar none. I've been staking my reputation that since 2019.
Fair enough. I mean, Toronto condos. Let's just talk about Toronto market in general.
Yeah, of course.
So what do you think, like detached, that type of thing? Like obviously it's a tale of two cities, right? It's always been with condos and detached or single family homes type thing. I mean, single family homes kind of kept it up. It still saw an exodus, but more people were living in single family homes 2020. So what 2021, what do you think in there?
Well, yeah, we're going to continue to see the rise in your freehold property, your townhome, your semi, your detached house, and this is what has always been the thing. The supply of that product, it's not even fixed, it's decreasing. So why it's decreasing is you'll go to an area where they'll knock down a whole bunch of houses and they'll increase the density by putting up a condo building. So you have a decreasing supply of that freehold product. And just by that nature, and as you said, you're not selling your duplex, right? So you have people going like, why am I going to sell this property? How am I going to replace this property? We talked about the high transactional costs to sell a Toronto property. You're better off renovating than selling and moving. So you have this really, really, again, low supply aspect. So you're going to continue to see prices increase with the low interest rate nature in Toronto for this freehold housing. It's just going to happen. And I just look at the buyers I have for the freehold product, and it's extremely difficult for them to get into good areas in Toronto. And that's going to benefit the underrated neighborhoods in Toronto. So you're going to continue to see, I want to say record level increases, but increases in the freehold market. But in the condo market, you'll probably see prices go up 10% from beginning of January to the end of December. What you'll end up having is just an affordability gap now. People literally can't afford to buy the houses, so they still need a roof over their head.
Well, and so you say 10%. I mean, it kind of sounds like CMHC, where they're always like low, right? Like CMHC is super conservative, and sounds like you might be being a little conservative. If you're seeing $100,000 month over month increase, like, I mean, I don't want to predict it, but a 10% rise would be obviously
that's spread across the board. This specific $100,000 bump are on, let's say, specific properties along the Yonge Street corridor, where the Yonge Street corridor has always been, the Yonge Street corridor will attract money from everywhere because that's where it has an international recognition. So you can see big bumps along that corridor because you can have international money at play in those locations, because those are locations that are typically Yonge Street by U of T. So you have an international focus on those properties. And then when we won't get into the whole international aspect in regards to the affordability of Canada, that's a whole other video.
That's a whole other video, and everyone can comment down below, because that stirs up a hornet's nest a little bit. But,
yeah. We're not going to get into that. But in regards to, that's where you get the young line. So I would say across the board, you're looking at it at a 10% increase, because some areas of condos in Toronto weren't severely impacted. It was just more the core that really had the negative impact, because again, there's nothing to do down there right now.
Yeah, and I mean, at some point, the Blue Jays will play at whatever place they're playing at. I mean, I'm going to call it the Sky Dome. I don't even know what it's called now. And the Leafs will come back, and the Raptors will come back, and people will want to live there again, right? Like that's going to happen. And bars will open, and this will get back to normal. It seems to be taking forever, but that just might be a little Stockholm syndrome.
Yeah, and that's where it comes down to. People got to look at it. As you said, you have friends looking at buying. Just my investors looking to buy, and our end users. You know, look at it over what's going to happen over the next 5 years. Is Toronto going anywhere? Absolutely not. We're going to get out of this, and by the fall, worst case scenario, 2022, and then that's when you'll see things starting to go back to normal.
Wow, and the government already says they're ramping up immigration, right? 400,000 to 500,000 individuals a year over the next 4 to 5 years. So there's 2 to 2.5 million people coming to Canada every year. I would tell you probably fully half of those are going to end up in Toronto.
Yeah, just if we look statistically, what's happened over the years, Toronto's the most multicultural city in the world, bar none. So if I'm an international coming from another country, I'm either going to have a friend, a family member, but at worst case scenario, just a community, an ethnic community or religious community that I can associate with, and that's going to welcome me in. We also have the largest economy in Canada and the jobs. So where am I going to end up? Most likely I'll end up in the GTA.
All right. Well, I mean, I think that's good for today. Anything else you want to share before we jump off? I know you got a hard deadline here, so.
Well, I'll just say keep on. Everyone just keep on following Mark's channel. He provides great advice. I actually sent him a message today. There was one post I absolutely loved today. It was kind of your step-by-step growth level. So I love that post. Keep on following him. And if you have any questions about condos, reach out, remaxwealth.com. That's remaxwealth.com, and love to chat with you.
All right, guys. So if you guys like these types of videos, definitely smash that like button for the YouTube algorithm. And yep, we'll see you guys in the next one. Have a great day, everyone.
See you, Mark. Thanks so much. Bye-bye.